Hey, I hope you're good. If you want to know how to test properly your trading strategy parameters to get the best results, I think this video is for you. First, I want to show you how including the Relative Strength Index, the RSI, can not only improve the profits of your strategy, but also make it more robust and safer. Then I want to use this opportunity to provide you a simple but complete Python code to help you optimize your trading strategies. And finally, more towards the end of the video, I will touch upon some caveats when it comes to optimizing a trading strategy, so you can avoid making costly mistakes. And I will also present some metrics that will help you judge on the quality of a strategy. This video is going to be a bit technical, so I would suggest watching it when comfortable and focused. And don't forget to hit that like button. Enjoy! Let me start by telling you what this beautiful indicator that is the Relative Strength Index, the RSI, is about. So it is part of the family of momentum indicators, which means that it is an indicator that is there to give you an idea of the strength, the momentum that is contained in a given market trend. So the RSI measures the speed and magnitude of a security's recent price changes. And in that, it gives you an idea of when the asset price is in an overvalued region or an undervalued region. In fact, this indicator is an oscillator that oscillates between this overbought and oversold regions. We will see that in a moment. Just note that this is quite an old indicator. It's been used for quite a while, and as you've guessed, I like it a lot. The key feature to keep in mind today is this. An asset is usually considered overbought when the RSI is above 70 and oversold when it is below 30. And this is what we will focus on to optimize the performances of a trading strategy. Let me tell you briefly how it is computed. You can see its formula here, where the average gain and the average loss here is the average percentage gain or loss during a look-back period. Historically, and most often, this look-back period is taken to be 14 periods. But this can be changed and you can play with it if you want. Let's take an example. Imagine the market closed higher 7 out of the past 14 days with an average gain of 1%. And the remaining 7 days, the market closed lower with an average loss of minus 0.8%. The computations would then be like this. Note that there's another step to compute a smoothed out version of the RSI, but I will not get into that today. In fact, there's quite a lot of things you can do with the RSI. You can also study divergences, etc. I think in the future I will dedicate an in-depth video on the RSI. But today we will stick to the basics where we concentrate on the crossing of this oversold and overbought regions. And you will see that there is already quite a lot we can do with that. Let me show you how the RSI looks like in TradingView. So here we are on the Bitcoin chart. Note that this is a case study, but really the optimization using the RSI that we're discussing today can really be applied to any trading that you're interested in. To add the RSI, we simply add an indicator and type RSI. And there it has appeared. Let me make it bigger. So you can see that there are two curves on this indicator. The RSI itself is the pink one, while the yellow one is a simple moving average of the RSI. If you don't know too much about moving averages, I can refer you to one of our previous videos where we discuss them in depth. So for today, we won't go into simple moving averages of the RSI. Let us concentrate on this concept of overbought region and oversold region. So if the RSI is above this 70 limit, it is considered that your asset is in an overbought situation. In other words, it won't stay overbought for too long, and then at some point you can expect your price to drop. And typically you see the example here. The asset stayed overbought for quite a while, but around when the RSI crossed below 70, you can see that the price of the asset completely dropped. So using this RSI to time nicely your sell can be quite interesting. And the opposite happens in the oversold region. So when the RSI is below 30, it is considered that your asset is oversold, meaning that after a time, a certain period that you can't know, but after a period, it is bound to follow a uptrend. And typically you can see here around this region where the RSI was below 30, we were at a local minima. And at some point around when the RSI crossed above 30, we had an increase. Let me tell you right now that basing a strategy on only buying when the RSI is below 30 and then selling when the RSI is above 70 doesn't really work. But when coupling it with other trend indicators, for example, it can really improve your overall strategy. Moving on now to our optimization code. This code is a Python notebook. I'm opening it with Jupyter. You can find it for free on our GitHub. I will drop a link in the description down below. This code is also based on a code that I presented in a previous video where I give an in-depth tutorial on how to backtest a simple trading strategy in Python. So for this reason, I'm not going to go through all the details of this code. I really want to get to the optimization part and the results for today. But if you have any questions, you can refer to that other video, but also come on our community Discord and ask them there. And also give us your comments and your impressions. You would be really welcome. So just a reminder to download the information we're going to do the optimization on. So on the asset, we're going to use the Binance client. And the asset we're looking into is Ethereum, so ETH. So our base currency is ETH. Our quote currency is going to be USDT. The time frame we're going to use is a one-day time frame. And the starting date is basically the start of when Binance listed coins on its exchange. And ending date, I'm writing none. That's just to say we will download the information until today. So make the back test until today. In terms of wallet, the analysis is going to be based on a wallet that started with 1,000 USDT, but we will really look into percentage, so that doesn't matter so much. And the trade fees, I'm taking trade fees to be of 0.1%. That's quite a standard value for many exchanges. So indeed, the first step is to download the data that we're going to use to do the backtest and the optimization. So for that, I'm using the Python Binance client. We get this big table with a lot of information and not all that we need, and some of it we need to process as well. So this is what this cell is for. In the end, what we're going to use is the timestamps and the closing value of Ethereum at this timestamp. That's all we're going to need for our backtest. The buy and sell conditions. So for this optimization and to show you how we can improve with the RSI, I'm using a very simple strategy, which is based on the crossing of two moving averages, two exponential moving averages. So basically, the condition to buy is simply when the short-term moving average goes above the long-term moving average. And the sell condition is then the reverse, when the short-term average goes below the long-term average. We can now start discussing the optimization. So what do I mean by optimization? What I mean today is to test the parameters of our trading strategy and to see how these impact the performances of the trading strategy. So in terms of profits, but also risk, etc. We'll get to that in a minute. So you see that my loop is actually going to be 3 loops. And the first 2 loops are going to be the loops where I test different values of the averaging period of my exponential moving averages. So you see that as my 2 loops scan these arrays, the averaging period of the short-term moving average and the long-term moving average are going to change. And these arrays, I'm defining them here, and I'm going to check for values of my short-term moving average that range between 1 and 30 with a step of 1. And my long-term average is going to be between 10 and 40 with a step of 1. That's where I found the most interesting information. That's why I chose these. Note that there's no need of testing all the values of the long-term moving average given the short-term moving average, or conversely, simply because for the long-term moving average to mean something, it needs to be longer than something and therefore longer than the short-term moving average. That's why I'm only going to check the values for the quadrant where MAL is larger than MAS. So I mentioned there were going to be 3 loops. So I mentioned 2 loop, which is testing the different values of the moving averages. The 3rd loop is here, and the 3rd loop is a backtest, which means going over the data that we've downloading and seeing when some buy triggers, some sell triggers, and seeing at the end how much we've made and what the strategy looked like. So this is done for each value that we're testing of the MAS and the MAL. So you can understand that this can take a lot of computation time. That's why I've run most of the cells that I'm presenting before making this video, so I don't have to run them live. So let me point out that at each time that we're doing a new backtest, I need to reinitialize the information about my backtest. So every time I say that my quote value will be equal to the initial wallet, the base currency goes back to being equal to 0. The number of orders, so the buy and the sell, will go back to being empty, and we will fill that array as a new backtest starts. The same for the value of the wallet. We put it back to being nothing, and we set the last ATH to 0. I'll get back to this in a minute. It is an important quantity to keep track of. So the structure of the backtest code is really similar to what I presented in the previous video. Let me point out one important thing, and it is this last ATH. So last ATH stands for last all-time high. And the reason why we compute this last all-time high is because we want to compute the drawdown. Let me explain a bit more what drawdown is. A drawdown is a peak to trough decline during a specific period for an investment trading account or fund. In other words, a drawdown refers to how much an investment or a trading account is down from the peak before it recovers back to the peak. Okay, so in this case, by computing the drawdown using the last all-time high, basically the drawdown that we're computing is the worst possible drawdown. In other words, the largest drop your wallet has undergone during the backtest. So you must understand that this is quite an important quantity to know of when you're testing a strategy, because a strategy that tends to give you very large drawdowns can be quite risky, because the larger the drawdown you can have, the longer your wallet will take time, your strategy will take time after that drop in your wallet to build back up into making profits. So you want to keep track of the possible drawdowns a strategy can give you. Okay, moving on to the rest of the code, we get to the part where we are saving all the results. I can understand that this looks quite intimidating. This is the part where I compute the necessary details to then compute some of the metrics I believe are important looking into when judging a trading strategy. So essentially at this point, we compute the P&L, so the profit and loss. Given this, we will compute whether the trades were successful or not. Let me mention that this if-else structure here is necessary because sometimes when you will get to some corners of the parameter space, so a corner where the short-term moving average or the long-term moving average is such that no trades happen and therefore the code would bug. So this is just there to deal with that. Okay, all this being said, let's move on to discussing what are the important information from this that I store for each backtest. And this is this part here. So typically I'll want to track what was the given value of the short-term moving average and the long-term value as well. So then the first thing that I save is the value of the wallet at the end of the backtest. Then I also want to know about the profits. Note that the profits are computed as the relative difference of the end value of the wallet with respect to the initial value of the wallet. And I time that by 100 because I want to know that in terms of percentage. I also want to track the number of trades. Note that I'm rounding the number here. That's simply because sometimes depending on the value of the MAS and MAL, you might end up with a backtest where the last order was a buy and the sell hasn't come. So it wouldn't give you a round number of trades because I would count a trade as a, in this case, as a buy, then followed by a sell. So the win rate I track as well. This is to know how many of all my trades were winners with respect to losers. I want to know how much profits did my winning trades do on average, and the same for the losing trades. I want to know how much they lose on average. Also, as I mentioned, we're keeping track of this maximum drawdown, so the worst drawdown. And finally, I also want to know how much money was spent in fees. So there we go. If you run this loop, let me run it. So you see as the loop is going, thanks to this print, I'm just showing the given value of the loop of the MAS, the MAL, and the corresponding profits. And indeed, you see that for the first value of MAS, that was 1, MAL is tested from 10 up to 40. And as soon as MAL hits the 40 limit, then MAS is incremented by 1, and MAL starts back to 10, etc., etc. We can now move on to discussing the results. So I'm compiling in a data frame all the information that we stored from our loops, and we're going to be using some colored map plots. So that's why we have this line here. This first section of the code is for the plots of the number of trades, profits, and wallet. I'm also singling out the values of the MAS and MAL that gave us the maximum profits. Let's move to the profits first. This plot here. So typically you can see that depending on the values of the long-term and short-term moving averages, the profits can change quite a lot. And typically we have a region here where the profits were the highest, between 5,000% and 6,000%. With that comes an important question. Say I wanted to turn this strategy into a trading bot. What value of the short-term moving average and long-term average should I use? Should I go for the maximum, which you can see here was for MAS being equal to 11-day and MAL equal to 19-day, and that gave us almost a 6,000% profit. With choosing this maximum, there's an important caveat that I need to mention. You must know that past performances never guarantee future results. In other words, the past market conditions that made of the moving averages giving the highest profits are not likely to be the same in the future. So choosing this might be over-tuning, over-fitting, over-optimizing your trading strategy. And that is why I like personally better to think in terms of a region. So rather than finding just a maximum here, I will go for a point that is in the middle of many points around that have a good profit. Therefore, my chances of having this point working better in the future are higher. But profits is not the only thing that is important for me when creating a training bot. As I mentioned, I also keep track of the number of trades. And to judge a trading strategy, you need a decent amount of trades. You cannot judge a trading strategy on 3 trades. This trading strategy around here gives about 25 trades, and I'm happy with that to start looking into this trading strategy. The other plot I want to mention is that profits were given in percentage, and we started with a wallet of 1,000 USDT. You can see that this region where the profits were high correspond to a wallet being of about somewhere around 50,000 USDT, which is quite an incredible amount, knowing that we've started with a wallet of 1,000. I forgot to mention, but the fact that there's only somewhere around 25 trades does mean that this trading strategy is not a high frequency trading strategy, but rather a long-term plan. Let's move on to the second section. The second section, we are going to study the health of the trades that the strategy made. The first metric we're going to look into is the win rate. The second one is going to be the average profits of the winning trades. And lastly, the average losses that the losing trades made. So the win rate. You can see that in the region that I was mentioning previously, the win rate is quite high, is above 50 or around 50. But you can see that also in other regions, the win rate was maybe even larger, for example, around here, which didn't really correspond to a region where the profits were that high. So one has to be careful with that. high win rate is not necessarily synonymous of profits. And you have an example here. Typically, the importance on the values of the win rate depends on the type of trading strategy that you're looking into. Here we're looking on a strategy that is really based on trending indicators. And often these strategies don't necessarily have very high win rates. It can drop to 30%, for example. What is really important is that the winning trades will be much more profitable than the loss created by the losing trades. But on the other hand, typically scalping strategies, so very high frequency trading strategies, you want those to have a very high win rate. I think I'll get back to that in another video. So if we look at the average profits of the winning trades and losing trades, we can see that the picture is kind of reversed between those two plots. So the region of the parameter space where the winning trades gave the most profits is more in this corner, and this corner is where they give you the least profits. And typically the region where we found that we had quite a lot of profits is in the middle here. And indeed, this is to be understood in correlation to this, because on the contrary, the region where the losing trades lost the least money is around here, and the region where they lost the most money is around here. So our region where we made the most profits is really in between where the winning trades make the most money and the losing trades lose the less money. So let's now move on to the drawdown, which I think is a very important metric to look into. I would not be comfortable with a trading strategy that goes maybe below 30%, below 40%. That also depends on the type of trading strategy. Is it a long-term plan or is it more of a short-term high-frequency trading strategy? This is my personal opinion. Remember that I'm not a financial advisor. With that being said, we can also see that the region where our profits were quite high corresponds to a region where the worst drawdown is not too bad. Let me mention that when I'm judging a trading strategy, and especially looking for maybe the parameters that are the best to use in my trading bot, I'll always look at the drawdown first and make my decision looking at the drawdown first and then looking at the profits. Because the drawdown is, in a certain sense, a measure of the risk of your trading strategy and how well it is behaved. So when looking for the best parameters, in my own opinion, I would follow the same rule. Look for a parameter that is well within a region where all the drawdowns are suitable. And then I will look into the profits and base my decision on the best parameters with those two metrics at hand, for example. Finally, we can look into the fees. So we can see that the fees can go quite high depending on the parameters. The region where we had the most profits is not exactly the region where we spent the most fees, because it is not the region where the highest number of trades was made, and typically that would have been around here. But you can see that the trading fees can be quite high, and typically in the region where we found our highest profits, the fees can go up to 1,500 USDT. If you want to start trading but use an account that has a discount on fees, you can use the link in the description down below. You would get 10% reduction on your fees on the KuCoin exchange. Note that if you already have an account, KuCoin actually allows you to have up to 3 accounts. And if you do create a new account, don't forget to go to the beginner zone. You can earn up to 500 USDT rewards. Okay, you might be thinking by now, where's the RSI? Where's the RSI? Well, don't worry, we're getting to it just now. But it was important for me to discuss all these results and these metrics. So now I can show you how we can improve on that using the RSI. So let's move on to the first optimization I want to talk about. And there it is. So this code is exactly the same as the previous, but I'm just adding the computation of a new indicator, that is the RSI. I'm using the TA library, Technical Analysis Library. And you can see that the improvement that I'm suggesting is here. By the way, I think I haven't mentioned before, but this structure, return this, means that the return is going to be the value of this comparison. So if this comparison is verified, in other words, if the short-term moving average is above the long-term moving average, this comparison is going to return a true, and therefore the function will return true. Okay, back to the improvement, and you can see that this is on the sell condition. So now if you want, the sell condition has two conditions to satisfy. The first one is if you want the trigger signal. So a sell condition would be triggered when the short-term average goes below the long-term average. But this will not happen exactly when this is triggered. There is now a sort of confirmation signal. And the confirmation signal is basically saying, well, let's not sell if we are in a oversold region, because we know that when the RSI tells us that the asset is in an oversold region, typically that means we're locally in a trough of the price value. So we might as well wait a little longer because soon the price will increase a bit. And this is typically when the RSI is above 30, as we discussed at the beginning of the video. So let's jump to the results straight away. So you can see at the level of the maximum as a comparison, adding this little confirmation increased the profits by a little more than 1,000%. But not only did the maximum increase, but indeed you can see that this region of interest that we discussed, all of it increased on average. So that's obviously very good. But I think the key to the game I want to talk about today is again the drawdown. Because this improvement made also this whole region to have a lower, worse drawdown, which makes me even more comfortable, if you want, in choosing a parameter in here. And I think this particular aspect of looking into the drawdown and optimizing regards to it is not something that is often touched upon in many YouTube videos on trading strategies. And I thought it was important to insist on this today. Let me now move on to another possibility of optimization with the RSI. And you can see that this optimization is kind of the reverse picture with respect to the other one. Now we're basically applying the same idea, but to the buy condition, and which means that now a confirmation is to say, well, let's not buy when we know that we're in an overbought region, because we know that in an overbought region, typically we are locally in the peak of the price value of the asset. So we might as well wait for that situation to change and go under the limit of this oversold region. So let's look at the results. And actually you will see that nothing much has been improved with respect to the case where we had no optimization with the RSI. And the reason for that is not that this was a bad idea. It's just that it's a coincidence. Given this strategy, the asset we're looking into, the dates we're doing our testing on, etc. But in general, I would definitely recommend to test with that. And even more than that, I think optimizing with the RSI in the spirit that I'm presenting today, one should really couple both optimization that I'm showing to you today. I would really encourage you to play around with those choices. So the time frame, the asset, the dates, to see how these optimization can affect the overall trading strategy. It's all in your hands now. If you have any thoughts or comments, or also if you have any experience with the RSI that you want to share with us, please write them down in the comments below, or also join our community Discord. It'd be really nice to see you there. Well done for making it up to here. Thanks for watching. I hope it was valuable for you. Please don't forget to give us a like and subscribe to the channel if you feel like it. If you want to get better at spotting areas of support and resistance to improve your trading, check this out. Otherwise, I think that one might interest you. Take care.